Well, we were just talking about what was happening in the resource sector of the Toronto Stock Exchange. One of the movers, positive movers, over the last little while has been copper. So Mark Lackey is talking about that this week, Executive Vice President at CHF Capital Markets. And, you know, Mark, I got all kinds of phone calls. Never mind you.
Yeah, that's right.
When copper popped through $3, and where is it sitting now?
Well, we're sitting at 315 right now, Pat. And it's interesting you got calls. I get them from all over the place. And I always find it interesting when some of the U.S. bankers phoned me at 290 copper and said, hey, Mark, that 250 we're calling at the end of the year is looking better than your 360. Interesting enough, I haven't had any calls from them in the last couple of weeks. So now we're sitting at 315, Pat, and we said all along we thought the copper price would strengthen in the second half of the year. One of the reasons is that the China, India, Indonesia, their infrastructure programs are going to kick in somewhat larger in the second half of the year. So we saw right there that we thought there'd be higher demand for copper in the second half of the year. And remember, 50% of the copper right now in China is going to the electrical wiring business. And we see that growing at around 20% right now. They're really moving their grid to a world-class grid. And, you know, some people said to me, well, how long will that take to finish that? Well, I think that could take a decade. I mean, they really are going to have one of the top electric power systems in the world. And it's very copper intensive. So I don't worry so much, Pat, if China grows at 7.5 or 7.8 or 7.2. Now, if it fell all the way down to 5%, then of course I'd have to revisit my situation. But I don't anticipate Chinese growth to be any weaker than that 7.5% growth rate.
Okay, that's China. And we've had other commentators in the past say India. I get all that. But copper is supposed to have the PhD in economics. That's what they always say.
Yeah,
you know? And it moved higher. While at the same time, the bond market, which really is invested in what's happening in the economy,
Absolutely.
is saying that the economy in the United States is weak and economies around the world are weak. I mean, it flies in the face.
Yeah, you know, I guess there's a relative view on what people consider weak. When I hear people saying that 3% economic growth is weak, well, it's an awful lot stronger than the, you know, negative number we had in 2009 or even a couple of years ago where we were under 2%. So I would suggest the economy is moderately strong. It's not booming. But, you know, again, if I look at even the Chinese number, 7.5% when you're the second biggest economy in the world, in my view, is relatively strong. And so I guess the question is, it'll be interesting to see how bond markets do react as time goes on. I have my own view about what's going to happen in the long end of the bond market. I think rates are going to rise. Maybe not significantly, Pat, but I do think they're going to rise. So, and again, I think copper to some degree isn't as tied to the overall GDP growth as it once was. When you look at these special situations like China, where half the copper is going to one specific sector. And that's going to happen, again, whether world growth is 3% or even 2.7 or even 2.5. I mean, unless we have a rapidly weakening world economic outlook, I think the fact that there's that much copper being used in one sector really does provide us a cushion in terms of demand.
Okay, and supply and demand are the key. Okay, your names, Tatiana.
Yeah, Tantina Resources.
Tantina, sorry, yeah.
Pat, this is a play in Montana. It's high grade, very good volume. It's actually got one of the bigger projects in the Western world. Recently, they had a few issues. A couple environmental groups decided they would challenge this particular project, and now the litigators have walked away because it was apparent that the Montana government was going to agree with the mining operations. But it's another point, Pat, that I would stress to people and wanted to bring up today. We always look at management, geopolitical risk, and projects. I think you also have to look at where the NGOs may end up showing up. And if you have an area where there's some environmental concerns locally, you better be aware of that. Now, this one surprised me, I have to be honest with you, but it didn't go anywhere. But I think, again, I'm making a lot of my choices, and my choices today are based upon areas where I know the NGOs aren't likely to show up.
Yeah. An example of that would be Peru or Chile,
exactly,
where they know there's lots of copper. And
that's right. That's right.
People are
and in some of those jurisdictions, there are provinces that are very pro-mining. And as we're going to say with the next company that's in the Philippines, some of the provinces very pro-mining, you don't have to worry. Others, you got to be careful.
Okay, let's get to St. Augustine.
St. Augustine, which is a copper and gold play. And Pat, they have the King project. Last year they got a PEA.
Where's the King project?
In the Philippines.
In the Philippines, okay.
Yeah, and it's in the Philippines, and as I said, part of the Philippines very pro-mining, other parts not so much. And so you've got to understand the NGOs recognize where they can get a battle and where they can win and where they can delay things. So here, I'm not too concerned about that. The locals are in favor of the project. The government's in favor of the project. Production probably within about 3 years. So it's still a ways out, but I think it's a good leverage to higher copper prices.
Yeah, and it gives you exposure geopolitically close to China.
Absolutely, Pat. That's a very good point. I mean, the shipping costs and everything else, China has a very positive relationship with the Philippines. So I think you're quite right. You have the advantage that your costs are low. And as I said, there's a very good relationship between the two countries.
Yeah. Are smelters an issue in that part of the world, per se?
You know, Pat, again, it goes back to what province you're in. So again, there are provinces, and especially if you have relatively new smelters that are pretty clean,
yeah,
you're not going to get a lot of local opposition. But if you go to areas where local people have been influenced by outside sources, for example, then you have to, again, be careful. I think that there's a lot of plays in the Philippines, and you'll notice I'm picking one here today, and I'm not going to mention maybe the few that I'm worried about, but there are some that are going to be in areas you got to be very careful.
Yeah, because smelters are more than just air pollution, too. It's energy. Do they have the energy to...
Absolutely. Energy issues, and again, so you have to go to the places that have the infrastructure.
Yeah.
And the places that have long-time mining operations in the Philippines have the infrastructure.
Yeah, and Copper Mountain.
Copper Mountain, of course, Canadian play, British Columbia, producer, great management team. Cash costs just above $2 a pound. So even if the Americans are right on the banking side, which I don't agree with, there's still a margin here. But if I'm correct about higher copper prices in the next couple of years, this is really a good leverage play in Princeton, BC, in a good jurisdiction, good infrastructure, and good management team. And I think that the mining operation there has a lot more potential to increase production.
Okay. Mark, great to have you here.
Great to be here, Pat.
Mark Lackey, CHF Capital Markets. A quick break. We're going to come back and have a